What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about a very important and amazing stock, something that I have traded and owned in the past. It's a biotech company. We're going to reanalyze and re-update our analysis on this stock. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. That's all I'm asking in return, is that you of course subscribe to the channel, and of course check out our Discord and our Patreon links down below if you want to join. Of course, be a part of our MoneyVest community as well. I did extend that sale for that 16% annual discount, so you can take advantage of that as well, and of course get access to all the members only private videos, Excel spreadsheets, and Discord access with all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included with the link down below as well. So the company that we are talking about today is going to be Vertex Pharmaceutical, ticker symbol VRTX. It has done incredibly well in 2023, up a little bit over 40%. And believe it or not, it's actually done really well in 2022 as well. This was actually one of the stocks that kind of saved my portfolio last year meaning 2022 now, not 2023. It actually did really well in 2022 as well, right from the moment when the markets started selling off in August of 21, actually October of 21. Vertex is up a whopping 132%. And of course, majority of that gain happened in 2022. So you'll notice that the entire 2022, the stock was up a nice 84 to 85% during that time, when there was an entire bear market in the S&P and the nasdaq as well. And of course, in 2023, we've seen that rally continue. So the last 2 years, we've seen a very nice return from Vertex Pharmaceutical. Now, more recently, though, it's hit a new all-time high of well over $400 per share. So $406, $407 per share is where the stock is, and a 52-week high of $413 per share, with absolutely excellent fundamentals in the cystic fibrosis sort of space. That's what they actually treat. They've got a lot of very best-selling treatments with Trikafta, Kildico. Those are some of the ones that actually generate a lot of revenue for Vertex Pharmaceutical, and they're always looking for other opportunities to treat diabetes, to treat blood cell diseases, a lot of other disease, and of course treatments are in the pipelines for Vertex Pharmaceuticals. So certainly innovate to bring highly efficacious therapies to CF patients, and of course when it comes to other potential near-term commercialized opportunities, accelerating diversified R&D pipelines. So they are spending a lot in research and development as well. And this right here are already the products that have launched. So they've got Symdeko, Orkambi, we got Kildico, and Trikafta. Trikafta is their best-selling product, best-selling treatment. And of course, other ones are already in certain stages, phase 1, phase 2, when it comes to pain, again, cystic fibrosis, acute pain, AMKD, type 1 diabetes, all the other ones that are also looking to treat. And then of course, beta thalassemia, sickle cell diseases, they're also under regulatory submissions that have been completed, just waiting for approvals as well, and which are going to be eventually launched for Vertex Pharmaceutical. Now, when it comes to CF, they do see now 88,000 patients with the CF, so that's a little bit higher than what their previous anticipation was in 2021. This is across US, Europe, Australia, and Canada, so slightly higher total addressable market. And drivers of growth, so treating younger patients and securing additional reimbursements. It's a strong U.S. launch of Trikafta in children ages between 2 and 5 years old that happened in 2023. Outside the U.S., strong Kaftrio growth in patients ages 6 years and older, following approval, reimbursement, and launch across multiple countries, and more people with the CF living longer. So median predicted age of survival is now 65 years, and raising the bar. So we've got Vanzacaftor triple, all pivotal studies in CF patients ages 12 plus and 6 to 11 years expected to be completed by the end of 2023 as well. So this right here was the actual highlights from the third quarter, fiscal year 23. And what we noticed was, of course, a very nice jump in the overall sort of revenues in terms of Trikafta, 2.27 billion. That's up from 2 billion. And other CF products did see a bit of a decline. So overall revenues did see slight increase from 2.33 billion to 2.48 billion dollars for the company. And of course, SG&A, R&D, other expenses were slightly higher from 758 to 993 million, so just under $1 billion. And non-GAAP operating margins were slightly down from 55 to 47%, with non-GAAP net income coming in at just over $1 billion and $4 per share in earnings. And balance sheet continues to be very strong. So from same time last year, they're up from 9.8 to now over $13.6 billion in overall balance sheet, cash and cash equivalents, and marketable securities. Now, this right here is the current fiscal year 23 guidance. They're expecting revenues of over $9.85 billion, so slight increase in the overall guidance here. And the commentary includes expectations in the U.S. for continued performance of Trikafta in ages 6 plus, and the launch of Trikafta in the 2 to 5 age group, which happened again in 2023. That's a big milestone for the company, and of course, other uptakes on Trikafta and Kaftrio in multiple countries internationally as well. And we've got the SG&A expenses unchanged at 4.5 to 4.8 billion, and tax rates expected at 20 to 21%, slightly lower than the previous guidance as well. So when it comes to the overall company fundamentals, this is a company that has absolutely stellar financials, 1.2 billion growing to over $9.6 billion. So very, very, very nice growth here. So this is the consistent uptrend for revenues, and gross profits also going from just a little bit under 200 million to over 5.9, almost $6 billion for the company. So this right here is the overall growth in the gross profit. And we've got operating income also moving in the right direction, going from about 392, $400 million to well over $4.4 billion for the company. So very, very nice 10x growth here for operating income for Vertex Pharmaceutical. And this right here is going to be the net income that's gone from 263 million in 2017 to now over 3.5 billion dollars. So very nice consistent growth there. And of course, we do have shares outstanding from 224 million to just about 260 million. That's a slight increase in shares outstanding, but overall it's been very, very stable for the company. When it comes to margins, we've got excellent margins for Vertex, as they always have been. 61% gross margins, net margins of just under 36%, free cash flows of over 40%. We've got return on common equity, assets, and capital, very nice double digits, so 15, 17, 23%. And the net income per employee just over $722,000 for the company, and valuation's actually quite reasonable at 27, 29 times earnings multiple. We've got a price to sales sitting at just over 10, which might be argued a little bit higher, and 23, 26 times cash flow, with enterprise value to EBITDA sitting at 19 to 20 levels for Vertex. So those are some, I would say, reasonable to slightly more expensive valuation multiples for Vertex Pharmaceutical. And when it comes to the balance sheet, we've got plenty of cash. Absolutely stellar balance sheet with just under $12 billion of cash, with $744 million of debt, which of course brings the company's total net debt, meaning how much cash versus debt. They've got more cash than debt on the balance sheet, negative $12.88 billion, and that's exactly what we want to see. And earnings expectations from $15 to $33 per share. So if you plug in some of these numbers, so if you come down, we plug in $15 all the way to 33, and that's going to happen in a span of 2023 to 2032. That's a little bit over 9% growth rate for the company over the next 5 to 10 years. If you plug in so the 5-year expectations, so 2023 to 2028, 2371. So if you plug in 2371, and that's only going to be 2028, we're again looking at a 9.5% growth rate. So just a little bit under 10% growth rate expected for Vertex's earnings long term. And revenue also expected to go from $9.8 billion to almost $19 billion for the company as well. So where is going to be Vertex buyable? Where is the intrinsic value for this company? Let's just do a quick calculation. So 260 times 15, we're looking at a net income of just under $4 billion. And if we grow the company by, let's say, 9%, and we apply a P multiple of, let's say, 24, 25, that's still, in my opinion, a little bit more on the expensive side, more higher, considering that the growth rate is not anywhere near close to 24 times. 12% discount rate, because I don't believe the company pays any dividend right now, so no dividends issued. So 12% discount rate, 10% margin of safety, and little to no share buybacks. Unfortunately, we're going to be looking at a fair value or an intrinsic value of sub $300. That's $292, and that's been updated from a couple of years ago. When I was buying originally Vertex Pharmaceutical, my fair value was in the 180s. So 180s was back in 2021. Since then, it's done really well. I, of course, exited my position in the mid 300s. Now it's well over $400, and the fair value now is going to be sitting at sub $300 for Vertex Pharmaceutical. And this right here is the entire sensitivity grid, where based on different P multiples and different growth rates, you can kind of see what's going to be the appropriate valuation for Vertex Pharmaceutical, right? So 292, anything sub $300, in my opinion, is going to be worthwhile for this stock. It's a phenomenal company with excellent fundamentals and growth trajectory long term. So that is going to be the entire analysis with a very nice uptrend of higher highs and higher lows, and of course a much stronger support. And my level, my area where I'm actually going to be interested in buying, sitting right there at $279, close to $280 per share. So this previous resistance potentially acting as a new support or resistance, support. And of course, another very, very important support level is going to be sitting right over here at $322 for Vertex. That's going to be, again, previous resistance, potentially acting as a new support for the company. It is very, very overbought. So I think Vertex is going to give us an opportunity in 2024 to dollar cost average and, of course, start a position. So that's exactly what I'm going to be patiently waiting for this company. Overbought here. So if it does end up pulling back, 322 is a level where I could see myself at least getting started with Vertex Pharmaceutical, and of course aggressively dollar cost averaging sub $300 in the 270s and 280s for this company long term. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like. Let me know your thoughts down in the comment section below for this company. Are you buying, selling, or holding? What are your thoughts? As always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. And happy investing. I'll see you all in the next video.